In this video, traders, we'll look at how long you should hold your day trades for. Hey traders, a very warm welcome to you. So, a pretty common question, and actually something I often ask myself as well when I'm drawing out my trading plan, constructing new ideas, strategies, methods. Maybe I'm harnessing ones that are working, maybe I'm trying to reduce ones that aren't working. And a big thing when you're day trading, even if you're swing trading, but this is specifically for day traders, this video is, how long should you hold your day trades for? We've got this dilemma, right, as traders. We want to hold trades for as long as possible because everyone tells us that's what we should do, and we know we should do that. We need to hold our winning trades. That's the big thing people are saying, cut your losers. But when we try and hold our winners, they don't go as far as we want, or it turns around. And when we don't hold our winners, then it rips off to the stratosphere. So how do we try to eliminate it if possible? But the best, let's reduce it. Let's try and reduce it. So the way that I will look at a market, and this is something that I've alluded to before, and we've talked about this, but not perhaps in so much depth in front of the screen, which is why I think this is an important topic to cover. Is that we talked about trade targets in terms of you can use an ATR, which is a very, very valid target, especially if you're kind of swing trading on a set and forget. Risk reward ratio is nice and solid. But often a good way of deciding when to take your trade is to look at what the current market ebb and flow and condition is like, and use that as a guide as to what you want to get. So if you're looking for that first momentum push, you need to look back and say, well, what is that going to be? What's that likely to be? So let's look at a couple of charts now, and let me explain what I'm kind of thinking about here. Dow in front of us, Dow Cash, 3-minute chart. You can have a 5, you can have a 15, but let's say you're kind of actively day trading the Dow futures, or spread betting the Dow, whatever it may be, and you're kind of you wanted to trade these moves up and these down and what have you. So you can start to look, and you can start to use a tool, or you can just literally do it manually and say to yourself, okay, well we're just open, been open for a while. What's that kind of move? Okay, it's about 50 points. So from that low to high was about 50 points. All right, and then we retraced a bit. So what happens on the next drive? Next drive we're kind of 45 points. All right, so it's the same order of magnitude. And then we consolidate a little bit. We push around. So what's the order of magnitude of the next drive? 47 points. We've started to get a bit of a pattern. Now, I'm not going to say this is a definite, this is always going to work, but we're starting to see, right, that the bulls are pushing for 40 to 45, 50 points, and then they're running, and then they're pausing a bit. And bears are stepping in. We could go one step more further. We could go, okay, well, what kind of pullbacks are we talking about here? We're talking about 20-point pullback. What's this one here from high to low? Oh, it's about 19-point pullback. What's this one here? High to low. And again, I'm doing it approximately, but the order of magnitude is what's important. Oh, it's about 20 points. So we can see the drives we're getting, the pullbacks we're getting. Already we know now we can start to get ourselves looking. We can start to say, okay, well, if we perhaps get a deeper pullback than that, I need to be cautious that perhaps we're going to unwind, we're going to undo stuff. If we get an extensive drive more than 50 points or 45 points, well, in fact, exactly what we were talking about before, we were talking about around the 45 to 50 points. If we get that and more than that, maybe I need to consider closing my longs. But the important thing is if we buy a pullback, we should not expect it to go 70 points in our favor, or 70 pips if we're looking at currency, without pulling back, when history, i.e. what's happened in the day so far, has shown us that it's done 45-point ranges before pulling back. So trying to force that on it, not to say it won't do 70 points, but we know that if we want that 70, we're going to have to sit through some kind of retracement. As long as we're prepared for that, we've got all the strategies, that's fine. What we shouldn't be doing is saying, hey, I want 70 points from this thing, and being surprised when it pulls back after 45, because that's always what it's always done. So let's carry on with this example. So again, we look and we say, what's the low of that swing? Okay, now we're 52, maybe actually from the low to there. Now we're 55. So what I alluded to earlier, when we start to get a bit more extension, especially when we've come from low to high, a good 135 points, maybe we can start to think that might be a little bit stretched. That might be the end of the move. Let's not try and be too greedy about it. Let's see what's happened. We had 45s, 20 pullbacks, 45, 20 pullbacks, a little bit more of a pullback. Now we've had an extended move, 55, and a big move prior, including all those. Maybe we'll want to look for an exit there. Maybe we don't want to be chasing stuff. And then on the subsequent unwinding, look, we've got 40-point pullback here. And then we start again. We've got a 40-point pullback here. The order of magnitude is similar. 45 on the way up, 40 on the way down. The retracements against the trend, let's see what these are. 17 points, 20 points we had before. Can you see what I'm saying? How we now position, we know roughly what to expect by the next pulse before it retraces a bit. Is that going to continue, and is that definitely going to happen? Of course not. But we get a feel for what the major participants are doing in this market at the moment, and we align ourselves with those. If we're in that pullback, 20-point pullback, what can we expect? We can expect 40 points. Can we expect 60? We might, but we need to be aware that we could get a 20-point pullback from 40 before we go to 60 and weigh up the odds of us getting that. So what do we hold for? We hold for 40, or we hold for a bigger move if we're prepared to do that. You can see what I'm getting to here. 40-point pullback here, and now we get a little bit of a deeper retracement. 30 points. This comes down. 50 points. Things start changing, coming to the close. 35. The order of magnitude is similar, but things have changed. So up until that point, how long did we get where we were getting very orderly moves? 45-point drives in one direction to 50 points, 47 points, 20-point pullbacks. Then it shifted the other way around. It's all very similar. It allows us to plant ourselves in with the actual ebbs and flows of the market rather than our will. Intraday, again, USD CAD 5-minute chart. Let's have a look. So we start plotting things here. 16-point drive. 16-point pullback. Let's have a look at this now. Now we're talking 17 points to here. Okay, a bit more extended. 22 points. Pulling it back 18 points. This one here 18 points. This one here 15 points. This one here 15 points. 17 points. 18 points to there before things started changing. We got a break. So you can see again how we can structure this with our trading plan. 18, 15, 18 points is the order of magnitude. It's not 50. It's not 90. That's what we want. So if we're long at lows, what can we expect? 18 points before something might happen. If we're short, here was a great example. 18 points. It paused, then it spat through. So it was a changing phase of the market. So we're not only trading for, if we wanted an extended target like that, wouldn't be just trading for the 18 points. We'd be trading for a change in phase of the market to give us that extended target. But you can see how 18 points will be the obvious first scale for us, and then by all means hold for that stretch. But bearing in mind that we've had, how many rotations? That is 6 or 7 rotations or 18 points approximately magnitude before we've actually done something pretty decent. And even then, you look at them, there's obviously something going on there, because these sort of order of magnitude points here, a little bit less that one actually, but from drive, high point to low point, you can see the kind of order of magnitude we're talking about. 18 points, 22 points, then the green candle pushes back up, 23, pullbacks about 15. You get what I'm saying, guys. We're trying to fit in to what the market is giving us. So from going back from the initial title, how long do we hold the trades for? We look at where we are in the expected intraday cycle. If we're buying 10 points off the low and it's a 30-point kind of range that it's been in, and rotations have been in 30 points, expect 20 before a rotation. Don't expect 50. So if that's not enough for us, we need to change when we trade, or don't trade that at all. So that's just a little thing, guys, of understanding price action and bolting yourself into what's being given and the market conditions at the time, rather than pressing your will onto something that's not there. And don't get me wrong, I've made this mistake very, very often, and probably will continue to, but I'm always aware enough now to say, okay, listen, you've got to look at the conditions. What are the rotations doing? If I'm trading this intraday, whether I'm trading a stock, a currency pair, an index, what are the rotations doing? How can I use that information to my advantage for my afternoon trading, for my next morning's trading, for the next trade I'm about to take, for structuring the next trade? Because it's valuable information, and I don't think a lot of people are utilising it to its full potential. Alright, guys, if you like this kind of stuff, give it a thumbs up. It's appreciated, and the comments in the comment section below also are appreciated too. Take care, keep your risk management, whatever you're up to. Bye.